Another day, another story. In this video, we'll be discussing the basics of financial management of corporations, financial strategy, investment decisions, and the management of capital structure. We'll also be giving you some examples to help you better understand these concepts. Financial management of corporations. The financial management of corporations is the process of managing the financial resources of a company in order to achieve its financial objectives. This involves managing the company's cash flows, assets, liabilities, and investments. Financial management is a critical component of corporate strategy as it helps companies make informed decisions about how to allocate resources, manage risk, and optimize their financial performance. For example, let's say that a company wants to expand its operations into a new market. The financial management team will need to assess the costs of this expansion, including the cost of acquiring new assets and hiring new employees. They will also need to assess the potential return on investment, ROI, for this expansion and determine whether it's a worthwhile use of the company's resources. Financial strategy. Financial strategy is the process of developing and implementing a long-term plan for a company's financial management. This involves setting financial goals, developing strategies for achieving those goals, and monitoring progress towards those goals. Financial strategy is closely tied to the overall corporate strategy of the company, as it helps ensure that financial decisions are aligned with the company's broader objectives. For example, let's say that a company's financial strategy is to maximize shareholder value. This might involve a strategy of reinvesting profits into the company to fuel growth, rather than paying out dividends to shareholders. The financial strategy might also involve a focus on cost-cutting measures to improve profitability and increase shareholder returns. Investment decisions. Investment decisions are the process of deciding how to allocate a company's resources towards investments that will generate the greatest return. This involves evaluating potential investment opportunities, assessing risk, and determining the expected ROI of each investment. Investment decisions are critical to a company's financial success as they determine how the company will invest its resources to generate revenue and profits. For example, let's say that a company is considering investing in a new product line. The financial management team will need to assess the potential market demand for the product, the costs of developing and producing the product, and the potential return on investment. They will then need to decide whether the investment is worth pursuing based on their assessment of these factors. Management of capital structures. The management of capital structures is the process of determining how a company will finance its operations and investments. This involves deciding how much debt versus equity the company will use to finance its activities, and how it will manage its debt and equity to achieve its financial objectives. The management of capital structures is critical to a company's financial health as it determines how the company will fund its activities and manage its risk. For example, let's say that a company needs to raise capital to fund a new project. The financial management team will need to determine the best way to raise this capital, whether through issuing debt, issuing equity, or a combination of the two. They will also need to assess the potential risks associated with each financing option and determine how to manage those risks. In conclusion, corporate finance is a critical component of a company's overall strategy. By effectively managing their financial resources, companies can make informed decisions about how to allocate their resources, manage their risk, and optimize their financial performance. Now we have a better understanding of the basics of corporate finance, financial strategy, investment decisions, and the management of capital structures. Thanks for watching.